any of the digital asset markets this year, they're just beautiful accumulation charts, higher highs, higher lows. There's volatility. And there was that period, and it was almost 5 months, where we were flat. We kind of had the big run in Q1, and then we kind of went flat through the summer. But, since October and Moonvember, it's been crazy. And
yeah.
And yet we haven't even started. See, this is what's so amazing. And, if you were going to give me an adjective, it would be ebullient. I have not been this excited in a long time.
Hong Kong has been loosening its approach to crypto this year, and the regulator's opinion on retail exposure to digital assets has shifted. In October, the SFC updated its rulebook to allow a broader range of investors to engage in spot crypto and ETF investing. Then last month, SFC Chief Executive Officer Julia Leung said the regulator was moving toward allowing retail amid investors to buy spot crypto ETFs and would welcome proposals using innovative technology that boosts efficiency and customer experience, provided any risks were addressed. According to Mark Yusko, these are interesting times, and he hasn't been so excited about anything as much as he is now. Market speculations keep getting positive. Everyone is on their toes counting down to the spot Bitcoin ETF approval. The Bitcoin halving is not even receiving as much attention as the ETF approval right now, as this marks a very important landmark for a change in the story of Bitcoin and the financial system. We will now get into the video, as Mark Yusko discusses the possible change in dynamics that the ETF will bring, the possibilities of it being a Trojan horse, and why that as well may not be feasible. He also dives into some macro trends, as we will see shortly. As you watch, don't forget to hit that like button, subscribe, and drop your comments below.
One that I'm a little nervous about is it a Trojan horse? Meaning, do those incumbents believe that by approving the boomer wrapper, right, the old school financial services wrapper for this new newfangled technology, that they can somehow control it and make it permissioned? It doesn't work that way. And you and I know it doesn't work that way. But I as smart as I think some of those people are, I think some of them think, no, it can work that way. We can get control of this, and we can make it permissioned. But even if they're malintended in the approval, meaning if that's the plan, I'm not saying it is the plan, but if that were the plan, right, to say, oh, we're going to do this to gain control, and then we're going to pass a law to make the rest of what you do illegal, and you're going to have to come through us, and you're going to have to buy JP Morgan coin. Okay, fine. But we in the tech now know it doesn't have to work like that. And yet, once you make that approval, to your earlier point, the very first question, will the other owners of assets say, oh my God, BlackRock's here? Okay, I can stop fighting it, and now I can embrace it. And BlackRock's gonna be like, whoa, no, we didn't tell you to embrace it. We told you just to, let us control it. And they're gonna say, I can just go buy Bitcoin myself, or I could go invest in companies that, are doing, payments a better way. And I do think it could be that legitimization, if that's the right word, that people say, okay, let's go find the best idea. And maybe that best idea isn't the old incumbent trying to, put the wolf in sheep's clothing, so to speak. I actually will agree with those that rail against it, saying we don't need it. That's the whole point, is that we don't want you to put it in the wrapper. We want you to put it on your ledger. But here's the thing. It's not going to happen all at once. I believe there has to be the CeFi step. We're not going directly from all centralized to all decentralized without this, or all TradFi to all DeFi without CeFi. And it's just not going to happen, because there are, especially, with what just happened, where Ledger had some losses, and we're investors in Ledger, and I didn't like that happened. And that wasn't like, their PR faux pas on the, restoration with the seed phrase. That really wasn't bad. But the fact that someone got exploited because they were using a DApp or something, okay, that's a problem. I mean, that's a vulnerability. And is it possible that people could make a mistake and forget where they put their seed phrase, or forget where they put their password, or forget where they put their ledger? Oh, you betcha. So bearer assets are fraught with peril.
Yeah.
Right? We all don't have our bearer assets in our homes anymore. In the earliest days of time, you had Saxo money in your house. And in the earliest days, they had little chickens on them or little pigs, and you had traded them with the other guy at the market. But then like, no, someone's going to come to my house and steal them. So I'm going to put them in this institution, and I'm going to get a little piece of paper. Originally, they called it flying money because it would fly away if you put it down. And that was a better system. And then we made electronic systems, and that was a better system. And so we've made improvements, and the digital system will be better. But to think that everyone is going to go directly from A to Z, right? Just no.
MSCI's Global Equities Index fell more than 1% on Wednesday after 9 straight days of gains, while Treasury yields fell as U.S. economic data beat expectations and UK inflation slowed at a rate that took markets by surprise. Oil prices settled slightly higher after hitting their highest level in nearly 3 weeks, as traders dealt with worries about disruptions in the Red Sea after Yemen's Iran-aligned Houthi militants stepped up attacks on commercial ships. Mark Yusko points out that there are not enough catalysts in the equity market as compared to crypto, hence the deep dive of most macro indicators. Let us now hear from Mark Yusko.
And November 6th, they passed the futures ETF, and it's been straight down, after that. And so I don't think there's that type of catalyst for equities. But, if I look at the multiple on NASDAQ and the multiple on the S&P, they're not sustainable. If I look at the fact that all the macroeconomic indicators are heading for the hard deck. I mean, I watched Maverick again twice last weekend. I love that movie. And whenever my wife's gone, I just watch the movie. And because she didn't want to watch it again. But and I watched it for the fight scenes, but flight scenes. But when they're doing that Cobra move, going for the hard deck, it's just crazy. And you look at PMIs, you look at the jolts. I mean, the job openings. Holy moly! I mean, it's straight down. And so, again, not predicting recession, not saying we're going to fall off a cliff, but those are not expansionary type numbers. And I do think there's a little bit of reckoning. Throw on top of that, the third year of the presidential cycle is always the best year, right? There's a 4-year cycle, follows presidential elections. The third year is when the incumbents are trying to stay in power. So they pass a bunch of stuff and do a bunch of stuff and bang on the central bank. And it is not a coincidence that Jerome Powell 2 weeks ago came out and said, yeah, I'm probably cutting next year. That is not a coincidence. That you go back in history, every third year that happens because they say we're gonna be accommodative because we like to get reappointed. And so I look at a couple things. One, the weighting of technology as a percentage of the overall market. We just surpassed the all-time high in 2000. That was unsustainable. This one is too. And big tech, the Magnificent Seven, are at valuation levels that just don't make any sense. It doesn't mean they can't go higher, but I don't think they will. I mean, personally, I think year 4 presidential cycle is pretty muted year, 3-4%. So, I think that's probably a good estimate for next year. Most people think it's going to be business usual. I always love the estimates are always, it's going to be up 8 to 12%. Always. That's what they always say. And then, sometimes they're too bullish, sometimes they're too bearish, but they're always saying 8 to 12. The fact that we're up 20 in the third year, that's actually about average for a third year, 16 to 20. So maybe a little above average. So maybe next year has to be a little below average. So maybe it's closer to flat. That'd be my estimate.
BlackRock, the world's largest asset manager, filed an amendment to its registration statement, S1, for a spot Bitcoin exchange-traded fund, ETF, with the U.S. Securities and Exchange Commission, SEC, on Friday. The firm disclosed that it plans to seed iShares Bitcoin Trust with $10 million on January 3, 2024. The amendment details that the seed capital investor, an affiliate of the trust's sponsor, purchased seed shares worth $100,000 for the spot Bitcoin ETF on October 27th, subject to conditions. The filing also outlines the redemption of seed shares for cash and the purchase of seed creation baskets worth $10 million by the seed capital investor on January 3, 2024. Bloomberg analyst James Seyffart remarked on social media platform X Friday that BlackRock has submitted an updated amended S1 form following discussions with the SEC the day before regarding its spot Bitcoin ETF filing. The analyst wrote, "Looking like BlackRock is planning to make moves on January 3rd. They're seeding the ETF with $10 million. He further speculates that it could mean that BlackRock is expecting to launch its spot Bitcoin ETF shortly after. Another Bloomberg analyst, Eric Balchunas, commented on X that BlackRock expecting to seed its spot Bitcoin ETF with $10 million on January 3rd is a pretty big bump up from the $100K the asset manager seeded in October. Eric Balchunas also highlighted that the SEC wants authorized participants, APs, named in the filer's upcoming S1 updates, giving them 10 days to submit. The analyst speculates that the securities regulator aims to approve applicants who have included the AP agreement in their amended filings and have adopted the cash creation model. BlackRock has held meetings with the SEC more times than other spot Bitcoin ETF applicants over the past month. The asset manager met with the SEC on November 20th, November 28th, December 11th, December 14th, December 19th, and December 21st. BlackRock also filed 3 amendments to its spot Bitcoin ETF filing in December. The world's largest asset manager initially sought approval from the securities regulator for the use of an in-kind method. Failing to persuade the SEC with a revised in-kind model, BlackRock opted to embrace the cash model for its spot Bitcoin ETF. The deadline for the first spot Bitcoin ETF approval is January 10th, and some anticipate the SEC approving multiple spot Bitcoin ETFs by that date, including Galaxy Digital CEO Mike Novogratz. What are your thoughts on Mark Yusko's interview and the SEC's meeting with BlackRock and other ETF applicants? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform, Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.